Hey, welcome back to the Storage Rebellion Show. This is episode 11, and today I sit down with Pete Smyth at White Label Storage to hear more about their journey into storage management, what they're seeing in different markets, and the different levers that you can pull in your marketing to help you continue growing your business. All of that is coming up next.
Welcome to the Storage Rebellion Show. Real conversations about building great storage businesses and becoming the kind of person capable of sustaining real freedom. Here's your host, Chris Michaels.
Welcome back to episode 11 of the Storage Rebellion Show. Today I am joined by Pete Smyth with White Label Storage. Pete, thanks for joining us today.
Yeah, glad to be here, Chris.
For those who don't know you, tell us a little bit about Pete Smyth, who you are, and then we'll talk some storage.
Yeah. So Peter Smyth, I founded a company called Local Locker in 2018. Local Locker is I call it, if mini storage is the true self-storage product, that is a micro storage product. We are taking kind of unused space in cities and converting it to a walkable storage product. Naturally, those stores are mostly remotely run. So we built a remotely run remote management playbook and the entire tech stack to run them. That then led us into the world of third-party management. There's a lot of stores in the asset class that require remote management. And so we thought our core competency was running stores remotely. And now we manage everything from 1,200 unit, fully staffed Class A product all the way down to 80 unit, 15,000 square foot or less remotely run facilities. We just eclipsed 300 facilities on the third party side, which is an exciting milestone for us.
Fantastic. And prior to self-storage and self-storage management, what were you doing before that, and what kind of turned you on to maybe jumping into this arena?
Sure. I've spent my entire career in real estate, so I guess it's not that creative of an endeavor for me. I started out, my first job out of college was working at a developer called Hines, based out of Houston. They're a big international developer. I was working on a mixed-use project there, sort of cut my teeth on the development side. Got the itch to see more deal flow, so moved to a real estate private equity firm called Federal Capital Partners, FCP, mostly garden, multifamily, and doing some opportunistic Class A development, or like being an LP on development assets in Class A markets. And then went to business school, and that's when we started working on Local Locker. I paired up with a classmate there, Alex Hartman, who's now my co-founder, and we were off to the races. But it was my experiences in real estate that led me to kind of wanting to do something entrepreneurial in real estate.
Yeah. Were you buying any storage deals at the time?
At FCP, there's a couple things that got me interested in self-storage. First off, you at the time, and even still, like, self-storage was one of the darling asset classes. I was reading a lot about it, but never really had major exposure to it. We had done one deal at FCP, a self-storage deal. I mean, 10% of that fund could be opportunistic. And the self-storage deal sort of knocked it out of the park, but it's a small deal and a big fund, and it was just not core to the mandate there. I wasn't even really closely tied to that deal. I just learned about it and became fascinated. And all the while we were building and buying these apartment buildings where there are these chicken wire cages in the basement getting higher rents per foot than the self-storage or than the apartments themselves. And so I kind of thought to myself, man, there's a true need for an urban product here. Self-storage is a remote, centralized asset that's not typically in where the parts of cities where people live, work, and play. And that was the idea. Let's build a kind of decentralized urban platform.
Yeah, very cool. And now you guys at White Label Storage, tell me a little bit about the team. How big is the company at this point?
So we've got close to 70 employees. Corporate team is, which is mostly in New York, is closer to 15 to 20. We've got our whole sales organization out there spreading the word, trying to find good partners for us and assets that are fit for our management. And then we have this team of remote property managers of kind of every part of the tier, anywhere from, people will manage, we really have 3 tiers of management that we have. So we staff around those tiers. Tier 1 being institutional assets with people on site, in which case we have W-2 workers that are on site, and then all the way out to the team that manages stuff in tertiary markets that might be on the smaller side. But we try to align the team around those tiers. So if you're a property manager for a tier 3 asset, you're going to be mostly working on those tertiary assets. We find that is a better fit than kind of pairing people in geography. We think there's more similarities among similar assets than there are among similar geographies.
Gotcha. Man, you guys are up to 70 employees now. I'm curious because I like the conversation around scaling. And as you guys have grown, like take me back to where White Label was maybe years ago. I'm curious what used to work for you guys at a smaller scale that completely broke as you guys started to grow, because I think this topic not only applies to storage investors but business in general.
I think the major sort of thesis over time for us has been building a system that scales. One of the things that started to break when there's pretty good demand for this product. We just didn't think our thesis that has sort of played out is there's not really a true national service provider that has a low enough cost structure to work for many of the self-storage assets around the country.
Mhm.
And we believed that we could build that product by building our own technology, stripping a lot of the cost and stack out of the expense line items for these storage assets, and that has largely played out. But as more and more folks said yes, the first problem we ran into was an implementation problem. Like, one transition manager can do a great job on any individual asset, but as soon as you're managing volume and
Mhm.
throughput, all of the little things stack up and become kind of cumbersome. And so, like, the simplest version of an email just gets lost. And so you have to start to
Sure.
specialize. So we started to look at, like, all right, where are the bottlenecks on the transition side? And the first year of scaling this business really was like solving that problem. Then
Mm.
you end up with property managers who manage lots of different types of assets, and that becomes complicated. And so you start to look for kind of how can we centralize some of these things. The call center volume became a real problem and staffing became hard, and we realized, you know what, having first of the month billing is difficult for us as a business because these peak call volumes are hard to staff for, and it's hard to manage a team that you have to flex up and down. So we then moved everybody to anniversary billing. So it's like, really, we're just like constantly finding the bottlenecks in management and
Yeah.
either centralizing a resource to kind of be solely focused on that, which scales better, or building technology to attack the problem. The most recent example would be, well, again, I was just using the call center as an example. We find that 30-ish% of the calls are for things that an AI agent can do well, like making a payment or asking for account information. You don't
Yeah.
necessarily need a salesperson to nail that call, but you want the salesperson making a sale. So we have triaged those out, which has, one, smoothed out the call volume, and two, allowed us to provide a lower cost service, because if you have an AI agent doing that, that just lowers your cost of your call center
Sure.
and you can lower your fees for clients. So
Yeah.
really, your question was, how does it look different? It's like we have more centralized more stuff and automated more stuff over time as we've grown and discovered opportunities to become more efficient.
I always enjoy having this conversation because it's funny how, folks always think scaling it's just that's going to be the thing that solves everything. And it can, right? But we all oftentimes think like, man, once I scale, then everything will be okay. I'll be free. But what they don't realize is all of the problems that they had no idea about start to uncover themselves as you start to grow. And it takes a skilled person to learn how to navigate those. As far as you, how have you had to change in the way that you think, lead, and operate in order to continue scaling the company?
Well, I mean, as you scale, you have more, unless you build out management layers, and I'm not saying that's
Mhm.
always the answer. Like, you just get more and more direct reports, and so you need a good
Mm.
system there. Yeah, when it was property managers early on managing these assets and reporting to me, I could like have a very good sense of how things were going. But then if you have 15 property managers working for you, it's very hard to like QA their work and like really know these things. So all of a sudden you have to start to find, uh, proactive and reactive ways to, leading indicators and lagging indicators for success. And in
Mhm.
order to do that, you need to hire, another management layer that you trust to kind of train and QA people. So for me, it's been, when, at what point do you give up a function and
Mm.
delegate it to another department leader? And that's a hard thing to do. And if you don't do it right, then you lose visibility, and it can fail. That's a lot of where we spend our time, and it is a hard thing. When you start a business, like, there's pride, there's a sense of pride in like being scrappy and like doing everything yourself. Alex and I were at one point sweeping the floors and answering the phones, and there's no job that should be beneath you, but at the same time, if you once you scale the organization, if you're focused on stuff like that, then you're not able to build a solid organization that can kind of withstand you not being there or any, it's kind of a house of cards at that point.
What do you think is that I'm trying to recall exactly how you worded it, but that moment where you
Yeah.
know that it's time to kinda maybe move on to someone else or stop doing a task.
Yeah. I mean, we talked about this. You and I have talked about this before, and it's kind of the zone of optimal or zone of proximate development, right? It's like
Mhm.
you want somebody to be in an area that is not beyond their competency, but where they can still grow. And so we have found if you're growing fast enough, you might have somebody who leading a department where the department outgrows their ability to manage it. And so you need to either level them or bring somebody else in who's senior. And like, I've talked to other founders about this, and that's a good thing for everyone, right? It's like if you are growing so
Right.
fast, the organization becomes too big for any individual person to manage that organization. You bring somebody senior in, then everybody does bet. Like it's good for everyone because that when you bring in the more senior person than you as
Mhm.
the former department lead, you're going to have an opportunity to grow and learn from somebody who's done this before. So we are trying to identify like, all right, who's the right person for an organization at this time. It's obviously not the same person in the same role forever. It can't be. That would just be
Sure.
like an arbitrary, you know, stroke of luck that every department leader can go from, when you have 10 people to 60 to 150. And so that is the concept that you and I talked about. It's like you want
Yeah.
somebody to be just, where they're comfortable but growing and learning. And if the organization is growing fast enough, there will always be a point at which there's somebody else that needs to come in for the
Sure.
most part.
And that's a book too, right?
There probably is a book around it. It's certainly
Mm,
like a behavioral psychology concept
gotcha.
that we covered at one point. It was actually another peer. I'm in this sort of like founder cohort that's run like a YPO style thing. I kind of learned about this. We were all sort of describing it to each other. We're like, man, like you hire somebody and they're great for a time and then you kind of like move on. And that's not always the case. And it's
Yeah,
probably happening with us too, right? Like, man, I need people to show me kind of what's going to take the next step here for our
sure.
business. But yeah, I think it's common for scaling organizations.
No, dude, absolutely. You kinda alluded to some of this earlier as far as having people on the team. I'm curious, like, as you guys are scaling your business, what are some non-negotiables when you're looking for the right people?
I think one of the things that we have tried to hire for more recently is like
Mhm.
we maybe made the mistake, or I don't even know that it was a mistake, but we hired a lot of people from within the industry and hired on experience instead of competency. And I think we've
Mhm.
looked more for the sort of growth oriented hire more recently than we have for experience. And so what I mean by that is like a lot of our time is spent. I'm actually trying to put together an article about, there are all these software companies out there right now that are
Yeah.
automating flows associated with self storage. But the one thing they're never really doing is, and nor should they, is like Cubby and Storable should not be building tools right now to manage the client relationship, right? Like they're sort of building agnostic of who the operator is. And so in some cases it's a property manager, in some cases it's the owner himself using Cubby or Storable to manage the store. And what that ignores is kind of reporting on where they're going and the kind of like the fiduciary relationship or the property manager client relationship there. And so what we have had to think about that where if you hire somebody that worked at a large organization but one that didn't have clients like that had all their own stores, they might not be great at setting a weekly agenda and
Mm,
singing for their supper to the client. So we've found that in some cases it's easier to train somebody on storage that already knows client relationship management than it is to
yeah.
do the reverse. So that just goes back to like where are the competencies? Like who do you want to hire? We want to hire people that can learn our system, but then have a core set of skills that work for kind of this client first customer service organization that we have. Yeah. So that's not to say like, I'm not smarter than anybody in the industry. And
Sure, sure.
there are many people we're still trying to hire from within the industry, but we have opened up to the world outside of the industry because we've realized like, somebody always has something that they don't know about our way of doing things and rather just
Mm,
hire the smartest, most competent person.
yeah. Dude, I think there's a ton of value in that. I can see. I can totally see where a lot of companies probably get stuck in that exact same thing. So I'm glad you said that. I think that's really interesting. I want to talk a little bit about marketing, managing storage facilities. A lot of storage owners today, especially those who have maybe 5 facilities or so, they think of storage marketing and they think it's just about running a couple Google ads. Where do you think people are kind of missing the mark with this?
Yeah, I think often folks are either doing too much themselves or deferring too much to whoever they've outsourced it to without asking questions around what is the return on cost. And so, I came to your conference a while ago and talked about this concept of lifetime value to customer acquisition cost, right?
Hmm.
Which is essentially like, total profit over the marketing investment. And you can back into that by understanding, really how many customers have signed up, how long they're going to stay there, like
Hmm.
term times average rent they've paid over how much you paid for them. And there are many factors that go into that, everything from, the top of the funnel. How many people are you generating at the top of the funnel that are interested in a self storage unit? And then
Hmm.
working your way down through the funnel. What are the little choices you can make along the way to improve and increase conversion? And then finally, how do you sort of increase the yield that you get out of those customers via, you know, ECRI or additional products that you sell? So that's a long preamble into I just think you need to have some framework of measurement that you can either
Hmm.
hold yourself or your marketing team accountable to, not just like, hey, the industry average is 3% of effective gross income and let's spend that and that's our budget for the year. Like, no, if you're not achieving a solid ROI, you should crank back
Sure.
ads and you might still do, you might generate more income because you're spending less on marketing and maybe you get a few clients, a few fewer tenants, but that probably is better than just pouring, non-accretive ad spend out there on
Sure.
people that aren't converting it. So I think that's the issue is like, if you owned a Hilton, a
Hmm.
hotel, you're just a hotel owner and the Hilton's running your store and you don't really have any choice. And you can be damn sure that they've got an organization that is, doing everything they can because they're incentivized to get customers in as well with how they get incentive fees.
Sure.
In self storage, you just have to make more choices around the service side of the business yourself. And
Mhm.
I think you need to actually acknowledge that and really think about like, are you an expert in that field? If not, find a framework to measure how things are going because don't just outsource it and set it and forget it. Yeah, every line
Sure.
item warrants some level of expertise.
Sure. Is there, as far as like you had mentioned top of funnel, I'm curious, what are some good top of funnel things for storage owners doing marketing?
So to be honest, it's more limited than other industries, right? Like self storage is
Mhm.
just a product that people are mostly like you're trying to capture the active searchers that are out there. It's not the easiest product to convince somebody that they need. It like, that's why for the most part, the most effective paid channels are Google, which means you're bidding on people that are actively searching for self storage near me or cheap
Yeah.
storage unit near me, and Sparefoot, which is a aggregate platform. Like those are the things that tend to work. If you have a good on-site presence and you're a big enough facility where you can warrant some sort of grassroots campaign, like it does help to do some stuff in the community, build a little bit of brand.
Yeah.
But as far as top of funnel is concerned, like you can pretty quickly sort of get a sense of what's out there by just
Mhm.
tracking kind of the leads to your website. And you could crank spend up or down and see, can you get more people to your website? And like you might find that you tap out pretty quickly. And then you're like, all right, this is more of a bottom of funnel problem here.
Sure.
Like you know, for the most part, Facebook and social are kind of the non-active searcher platforms. You can
Mhm.
test those and learn quickly, but if you don't see good yield on that, then I would just stick with the paid Googles and Sparefoots of the world. And I don't know if it helps, but
Yeah, no, I think it definitely helps. I mean, this just isn't the wheelhouse for a lot of storage owners. They kind of just dump some money into Facebook ads, Google ads. But as far as like having a follow-up system, a tracking system, moving people through your funnel, I think that's where a lot of people get stuck. And then I also think a lot of people just don't know how much should I be spending on my ads if they're doing it themselves. I don't know if you have any insight to
Yeah.
that. It depends, right? Like if you have very low occupancy and you need to crank that up, you might be investing a little bit more, maybe not.
So it does depend, but I think the range is probably, for the most part, I would think about it as a percentage of potential gross revenue.
Mhm.
And if you're spending more than 5%, that's high. And if you're
Mhm.
spending less than 2%, that's relatively low. Now, if you have a 100-unit facility and 97 of them are full, like, let's just pull back on ads because at that point you have
Sure.
limited inventory and,
Sure.
you're just not going to convert on a lot of the leads you generate because there might be just one unit type available. But I think start with something like 3 to 4% as your budget and then study how that goes. That is my rule of thumb on marketing. That's where we will start. In lease up, you might spend a little bit more just because you're just trying to get people in the door at that point. But I think that's, if you're looking for a rule of thumb, I'd say 2 to 5% and move from there.
Hey, it's Chris. We'll get back to the show in just a second. I wanted to quickly share an opportunity that will soon be available called the Storage Rebellion Accelerator Program. This is a 90-day program for new self storage investors who are serious about getting started and taking action. We only run this program 3 times a year. We only allow 10 people at a time to come in to allow for a deeper level of support, but it's designed to develop the foundation, mindset, structure, and habits to build an extraordinary life and extraordinary wealth in self storage. New investors come into this space, they buy a training course, they listen to videos online, but they never do anything beyond that. And if they do, they oftentimes stall out because they come across problems, situations, and deals that they don't know how to handle. But the accelerator program was designed to build you into the person capable of sustaining real freedom and real success with self storage. If that sounds interesting to you, go to storagerebel.com. You'll see a link for the accelerator program that will take you over to an application. And if it's a good fit, we can have a conversation and explore it a bit further. All that being said, I hope to connect with you on the inside. Let's get back to the show. You had mentioned earlier, as far as like maybe showing up in the community, which I was actually curious to ask you a little bit more about that. I don't know if you guys have done it or you know property owners that do it. I think relationships are critical in any type of growth. And so I always wondered about, first of all, because storage is just such a plain business, like what can operators do to show up in their community to maybe to give back and build those relationships, which I think would end up benefiting them with business as well.
Yeah. So if you have, where I've seen it done well is if you have somebody on site, like that person doesn't always need to be at the desk. Like every facility can be managed remotely for some portion of the day, right? Like you can
Yeah.
book people online, you can give people who are tenants access. And so I think the most effective strategies that I've seen is hiring somebody on site who's a good representative of your facility, like a good salesperson that can close people when they walk in, but that can also walk around to the apartment communities, maybe get involved, like maybe sponsor a local 5K, like just get one of the booths that you can get there with some branded stuff and just go build relationships in the community because you have kind of stranded asset there anyway. Like that person
Mhm.
is kind of being paid to come into your facility every day. And many hours of those days, as we all know, which is why
Mhm.
remote management has become popular, they're just sitting there, like either not taking calls because no one's calling, like there's not a call every second,
Sure.
or done their walkthrough of the facility and they're just idle labor. In that case, especially if you've got centralized customer service function, maybe someone you've remotely or a tool that is
Mhm.
following up with your delinquent tenants, then you've got an asset there who can walk around the community and build relationships. That would be my kind of way to generate new demand.
I think that would be a really smart use of your money too, right? I mean, you're already paying them. Like, how else could you make better use of their time? And I think that sounds like a really smart strategy. I was kind of curious to hear a little bit about what do you think? I mean, because you guys have worked with so many facilities and even property owners at this point. What do you think separates facilities that consistently stay full from the ones who are constantly struggling with occupancy? And I know there's some market dependent things here, but like I'm curious if there's any other things you guys see.
Yeah. I mean, let's remove a facility that's in a good market from a facility that's in a bad market and just
Mhm.
assume all things are equal. I would say some things that we have done that we think or we've seen move the needle are like every facility does have some element of running rate increases, right? Well, the having some ability to negotiate those increases or a strategy around not being as aggressive with them is just going to reduce churn, right? So there's first off, there's rolling it out. Are you going to roll it out
Sure.
aggressively? Meaning, like, were you clear about your communication on promos that they're maybe 3 months in, you're going to roll off to a higher rate? Do you have a cap on how much you're going to increase? If somebody came in at $50 and now your rates are at 100, are you going to move them all the way to 100? It might make more sense to cap your increases. And then if you are going to be aggressive, at least train your staff to be in touch with the folks that are moving out and say, look, is there some rate that we can keep you? That is one tactic. I just see that the execution of ECRI is an issue. Another one
Mhm.
is the cleanliness of the facility. It's just table stakes to keep a clean and secure facility. If there's
Sure.
just stuff sitting out, or if there's a break in and there's
Mhm.
reviews on the site for it, we see these tickets come in and people get uncomfortable and they leave. They don't want their stuff to be at risk. So
Sure.
uh, all of these things add up. I think most of the things that would impact it around running a clean and tight facility, everybody should be taught to do anyway. But I
Mhm.
think the nuance comes around how you roll out rate increases and how you communicate with customers. That's a big one. You can create some retention and keep tenants in place longer.
Yeah. That's great insight. I'd love to dive into rate increases a little bit. I know this is a much broader discussion, but maybe there's some quick do's and don'ts when it comes to doing this.
Sure. I mean, to start, this is actually pivoting away from kind of like being soft with it. Like, you should run whatever process you have,
Mm.
stick to the process and do it every month, right? Let's say that you decide you want to push rates every 9 to 12 months. Like, decide what it is and then
Mhm.
look at the cohorts of tenants and just run the formula every month. It could be as simple as an Excel spreadsheet where you just pull down the rent roll, plug it in. You see the last rate, you test every cell, right? Every tenant is a row in that spreadsheet, and whoever hasn't had a rate increase for the last 9 months is eligible for increase. That's sort of test number one. Test
Yeah.
number two is there some minimum that you want to push and some cap that you want to institute in order to kind of like move people at least some amount along, and then cap them so that you don't have some like major churn event
Mm.
scenario where they feel like they've been gouged. That, I think, is kind of like the base case. Everyone should run that process. And that doesn't mean that it's an aggressive process. It just means that it's a process. And if you get in the habit of doing it and have some person on your team that's responsible for it, then over the long term, you're going to capture that extra yield that is available there. So that is how I would say do it. Then I would identify, as far as how you're going to execute, there are tools that can achieve this, or there are people that you can have do this. I would look at what resources do you have at the facility. If you have a good property manager that you feel like is relatively idle, but you want to have somebody on site, then you don't need to sign up for a revenue management tool that does this for you, because it's not that hard to run this once a month. But
Mm.
if you're running it fairly lean and you've got the person on site, you want them mostly taking calls and you want them doing the walkthroughs and you don't have them there all the time, then I would say, it makes sense to sign up. Most of the FMSs will run this, but it makes sense to put it on auto drive and maybe pay the extra dollars to run it. So I think it's really about like, what is your setup and what is going to be the easiest way to get leverage and do this every month. Yeah, if you talk to a software vendor, they're going to pitch you on their product and say it's the best thing in the world. But like, you just need to run. It's just a matter of running the process
Sure.
because you don't know
What
exactly what it's going to be.
yeah, and what's a healthy occupancy level that you guys, I mean, for us, we're typically aiming to be around 90%,
Right.
and we're pushing rates, and based on how high we keep going occupancy wise, we start to determine where we can go with the rates. But where do you guys aim to be? And maybe why too?
Yeah. No, I mean, look, I haven't seen, if you've gotten yourself up above 90, like people say this, it actually is just hard to even achieve above a 95 to, close to 100% occupancy. Just there is always just some structural vacancy that's in there. So,
Mhm.
yeah, when I first came into the industry, I was told 94%. I think something closer to 90 is like you said, realistic, because you're going to get the 5% off the top anyway of people that are just naturally churning because
Sure.
they're on their way out. And then some, there's the units that are in lease up that haven't occupied yet because you allow some sort of pre-booking So yeah, I think it's certainly not in the 80s. You should be targeting somewhere in the 90s. And that's because, you only have, if your expense ratio, a good expense ratio in storage is like 30%, right? Like a smaller facility without sort of scale is probably going to be closer to
Hmm.
40% and maybe even worse than that. So giving up more than 2 to 3% there, you really start to chip away. I haven't heard of any revenue optimizing strategies that result in you landing in the 80% with people paying more in their units. I think, 90% shows you that you've kind of like identified what's market and you've got a good handle on your economic occupancy there. You know what your target in place rate is. You don't have a high churn facility and you're doing a good job of creating some sort of retention there. If you're below that, then you're going to have to spend more on marketing and you just add another expense line item anyway. You didn't ask this question, but I would rather be less aggressive with ECRI in this environment with these REITs because then you don't have to spend as much on marketing than I would be more aggressive because I just don't. Then you're just entering the unknown world of how much demand is there in a market. Like, let's
Sure.
just treat our customers well and try to keep them in place and push rates where we can, but not get
Mhm.
too greedy because we've seen a kind of a soft market since COVID.
Yeah, I'm kind of, this is a little bit of a piggyback off of what we're talking about, but as far as like, we talk about raising rates, occupancy, for the folks who don't have somebody on site and they're using a boots on the ground, what do you think is the most efficient time for those boots? Because we have the typical task, right? Like picking up trash, cutting the grass, cleaning out units where stuff got left behind. One of the things that I had my boots do, he would walk the property. I had it every 2 weeks just to see which units were locked, where maybe somebody left and didn't move out or tell us, just to keep accurate rent roll. But I don't know if there's anything else that comes to mind where you're like, man, make sure you have your boots or your manager taking care of these things because it dramatically helps.
So we've taken over a bunch of facilities and we've run into issues on like inventory, like just mystery units.
Yeah.
Making sure that you lock the vacant units is important. And then making sure you identify, like, who's in each unit. Like, that stuff can get out of hand pretty quickly. A lot of times this will happen on like the kind of like boat thoughtfulness around the boat and RV section. If you have that, we have often seen it's an easy throwaway when you don't have any more buildable FAR. There's that excess land. People will just maybe lazily stripe spaces and then let
Mm,
people park wherever. And then that becomes pretty hard to unwind in any sort of delinquency process or when those units eventually start to become fully occupied. I just think the one thing I didn't hear you say there is sort of inventory, and that's important. It's hard to unwind it. Then you're cutting locks for units that maybe your call center accepted the guy moving from one locker to another and you botch something. It's just like try to be on top of that from the get go.
as far as like what you guys got rolling out now with white label storage, I know you guys recently came out with a whole bunch of new products to help storage owners. Talk to me a little bit about what you guys got right now, maybe some things that you're working on for the future as well.
Yeah. So we tend to build tools that are a little different than like a FMS or a typical software company would build because we're a third party manager. So a lot of times when we do these product launches, like we don't even launch them when they're commercially ready yet. We launch them and then demo them, but they work within our property management organization. And we are always doing it from the mindset of like, how can we either lower the cost of property while delivering the same value or
Mm,
do a better job? And so an example that I mentioned before is the call center, right? Like we don't want our sales calls going to an agent for the sake of lowering costs, even though that would be cheaper because we think that a person is going to do a better job, doing something like negotiating an ECRI or closing a sale if you incentivize them to close the sale than an agent ever will. Like you can just tell that these agents are agents.
mhm,
And so the use case that we did think we could do as good of a job on is just like, hey, what's the price? If somebody's calling to ask the price, we can have an agent tell them the price. Or if somebody's calling to make a payment and they're a delinquent tenant, why would we not take that payment 24/7 so that that person doesn't come in the next day and call? Now, that's not necessarily a tool that we sell to someone. That's just a tool that we've rolled out to have a better call center ourselves. And
mm,
then in many cases, we are doing like a call center only product for people where it is a blend of agents and people. Now, one of the tools that we did build that we are letting people sign up for as a one-off is it's called Store Bill. We found that a lot of our time was spent just calling and tracking down people that are past due, like the
Mm,
process of collections. We didn't think that the FMSs were great at it. And so we built an outbound caller, outbound email, outbound text that sends a simple one-click link for people to make their payment, get back on auto pay. And you run through enough rounds of that, and everybody's kind of back
sure.
on auto pay, and you just have way fewer delinquencies.
Mm,
We didn't do that because we were trying to sell another product, though now we can. We did it because we were spending a lot of money on outbound calls. It's just a labor intensive process for
mhm.
us. So that's typically where we're focused on things. We built a website because we don't think anybody should pay $500 a month for a website. It's so like if you have an engineering team, you can build a website. And so our website's just cheaper than everybody else's because it's like, yeah, it's one of those things, just a high margin product people are out there selling. And we don't think that's right. So typically it's like if you're thinking about white label self-storage products, it's we're doing it through the lens of lowering the cost in an operator's stack. Not that's because we are an operator ourselves. That's our philosophy. We're going to keep rolling out different use cases of agents. We built a revenue management tool just because we spent a lot of time on that. So we'll probably roll something out that's commercial on that side
Mhm.
as well. But yeah, it's been exciting. We keep growing our engineering team here, and we think there's a lot of opportunity to kind of continue to learn from our
Yeah.
clients and build new stuff.
That's cool, dude. As far as white label storage and the management that you guys are doing, when should somebody be considering jumping into something like this? And maybe who's even your ideal customer that you guys like to work with?
Yeah, I think somebody that can acknowledge that they are not in the business of service and that they are looking for a third party manager that they
Mhm.
trust to run their asset. Like that's the best relationship we can have. We have tried to work with folks where it's like, hey, can you backfill? Can we use you as an admin? That doesn't work because if we have a different philosophy, it's like we have a system. Back to the conversation with you earlier about scaling. We believe in our system because when we've tested it,
Yeah.
we can make some changes with respect to cadence, how aggressive we are on ECRI, but we still need to do it on this day of this month. And if you don't want us to, then it all breaks and the foundation's gone. So we work great with people who want to, they want a monthly report, they want a weekly check-in, and they will buy into our management product. I'd say timing wise, if you're buying an asset, the sooner you can get in at the point in time of underwriting, just because you'll get to know us at that point, and we can
Mm,
probably tell you like give you a good read on what the cost structure will be. If you already own the asset, I mean, it's easy enough to get on the books with us and have us talk through how we would run your facility. I think bringing a property manager in before a sale makes sense because it provides a credible set of hands on the property. And I think the kind of owner operator error won't be discounted as much by any future buyer.
mhm.
I think we have the scale now where people kind of know, yeah, it's in good enough hands if it's with
Yeah.
us, Sam, or, you know, Storage Pro in those things. I think having a property manager in there is just going to help on the sale. And it just helps you focus on, yeah, there's a new set of workflows you're going to need to focus on when you're working with the broker. And this just
Sure.
frees up time.
Yeah. And is there do you guys offer like an exploratory call for anyone thinking about jumping in?
Yeah. I mean, you can reach out to on our website, White Label Storage. You can go to sales at whitelabelstorage.com. But yeah, I'm also willing to put out my email, Peter at whitelabelstorage.com. Just
Yeah.
reach out and we'll line something up. Yeah. I love meeting with people in the industry. It's a small industry. And so we'll end up talking to you at some point.
I love it. Well, Pete, dude, this has been awesome thus far. Greatly appreciate your time and all the value that you always bring. And highly encourage you guys to reach out to Pete if you want to explore white label storage and their services a bit more. Pete, before we hop off, what's the last piece of advice you'd love to leave storage investors with today?
We've done this before. I've kind of tweaked this a bit.
Have you been preparing for this question?
No, no, but we already sort of talked about last time, the last question you asked me was kind of led us to the zone of optimal development.
Yeah, yeah,
So,
yeah.
but we manage enough assets now that I think there are people kind of pursuing different buy boxes and different investment opportunities. I would say the facilities that have gone the best are those that have like don't convince yourself that you're going to be the turnaround guy. Don't
Mm,
assume that the facility you're buying is doing poorly because it is so mismanaged and that you will come in with a manager and fix things. Like the facilities that are most attractive to me are ones that are either somewhere above 75%, like have proven that they can lease up,
mm,
where you're going to squeeze like 10 to 15% yield out. Don't assume that a 50% occupied asset that's been sitting there at 50% occupancy for a long time is one that you can get to 100%. So I think these strategies, like your value add play, should assume 10 to 20% yield tops, not 50%. We see a lot of folks that just assume there's more mismanagement in this industry than there really is. At the
Mm,
end of the day, self-storage, it's a commodity product. People will find their way into these storage units over time. And so my pitch to you is like find the asset where there's already some traction there, and you're going to be the person that kind of takes it, rolls out real institutional practices and squeezes out that additional yield. That's still a great, a 10 to 20% pop on top line is still huge. Then you can cut out operating costs and have a real plan there. I just think, man, we see a lot of assets that, like, not every storage asset's a great asset. And
sure.
and so unless you have a very, very compelling reason as to why an asset is underperforming, just assume that it will be hard to get it to perform.
Always great advice. Pete, appreciate you, brother. Thanks for being here.
Thank you, Chris.
Thanks for listening to the Storage Rebellion Show. For resources, support, and a community that has your back, visit storagerebels.com. We'll see you next time.